Hi guys, this is Dan from the Investment ABC, and in this video I want to analyze another Chinese company called Baozun. Baozun is a little bit comparable to Shopify, which is why it is touted the Chinese Shopify. Because of China's strict policies, it is almost impossible for big foreign companies like Google or Facebook to operate in the country. So there is most of the time an Asian counterpart to these big tech companies. Tesla has, for example, NIO or BYD, Google has Baidu, Amazon, Alibaba, and Baozun could be the Shopify of Asia. Let's first have a quick look at how Baozun describes itself as a company in this short clip.
We are Baozun, the leading brand e-commerce solutions provider in China. We connect brands to consumers through omni-channel solutions, helping their sales and profits grow. The size of the opportunity in China is huge. Retail sales are growing at over 10% per year, and more shoppers are making their purchases online. And their appetite for brand e-commerce is growing even faster, with the market increasing from 4 billion in 2010 to an expected 379 billion by 2017. And we are perfectly positioned to take advantage of this huge and rapidly expanding market. We already have a 20% market share, and more brands are looking to us to execute their e-commerce strategies. Why? Because e-commerce in China is different and complex. Our expertise lies in offering brands tailor-made, end-to-end e-commerce solutions that fit the Chinese market. From official online brand stores to China's largest online shopping marketplaces like Tmall and JD.com, social media platforms like WeChat and Weibo, mobile stores, and online to offline. And our deep understanding of these different channels means we're able to combine their strengths to deliver sophisticated omni-channel solutions. These deliver a seamless shopping experience, helping to deepen brand loyalty amongst consumers and in turn, increase sales. Technology is key to our success. Our proprietary systems fully integrate with our clients' back-end systems to enable real-time data tracking and analytics. And we provide store operations, digital marketing, customer services, warehousing, and fulfillment. We are trusted by some of the largest global brands, like Philips, Häagen-Dazs, the NBA, and Nike, and many others across a range of categories. We are constantly innovating and changing, introducing new products and services, adding brands to our platform, expanding our offer across the rest of Asia, and leading the way in Chinese e-commerce. Baozun, connecting brands to consumers.
So Baozun describes itself as the leader in China's brand e-commerce service industry. The company provides its customers the full spectrum to build a viable online presence, from digital marketing, online store operations, IT solutions, customer service, and warehouse and fulfillment. Baozun is the go-to company for many big and small companies from abroad that want to establish and grow its brand in the Chinese market. Furthermore, it is not only companies from abroad, but also local Chinese companies that are Baozun's customers. As of the second quarter 2020, Baozun has 250 brand partners they are taking care of. Many of these companies are big names like Burger King, Nike, Starbucks, IKEA, or Häagen-Dazs, for example. In today's day and age, almost every company needs an online presence. Even a company like IKEA is selling through a third party for the first time. This trend only increases in the next few years, which is great for Baozun's business in my opinion. The transaction value of B2C and C2C e-commerce in China grew from 2015 until now from roughly 3.8 billion RMB to almost 11 billion RMB. Analysts are expecting the market to grow almost to 27 billion RMB in the next 5 years. The brand e-commerce service industry is expected to grow from 688 billion RMB in 2020 to over 2 trillion RMB in 2025. The industry has a compounded annual growth of 23.9% from 2019 to 2025. Baozun's market share is 7.9%, while the top 5 companies combined have a market share of 14.1%. Baozun is earning its revenue through service and consignment fees on the one hand, and on the other hand, the company is buying partner products which they then sell through its channels directly to consumers. Both segments are almost 50% of the total revenue, but Baozun is focusing to grow its services more over time to get higher margins. Let's just have a look at the numbers and determine whether Baozun looks undervalued or not. If we look at the revenue, we can see that it increased from roughly 3.4 billion RMB in 2016 to around 7.3 billion RMB in 2019, which is a compounded annual growth of 29%. 7.3 billion RMB is around 1.1 billion US dollar. The operating income and overall net income is also increasing steadily. Net income increased from 86.6 million RMB in 2016 to around 281 million RMB in 2019. Furthermore, the company has a free cash flow of around 148.5 million RMB, which it can use for investment purposes or reinvest back into the company. The company has around 5.7 billion RMB in current assets, of which are 2 billion in cash and cash equivalents. The current liabilities are just around 2.3 billion RMB, which gives the company a current ratio of almost 2.5, which means the company can cover easily all short-term liabilities which are due in the next year. Furthermore, the company has long-term debt of around 2.2 billion RMB, which is quite low compared to the cash the company is holding. The current market cap of the company is around 2.83 billion US dollar and its enterprise value at around 2.61 billion US dollar. The company has a trailing PE of almost 50 and a forward PE of 21. The price to sales ratio is quite low with 1.88, especially for a growth company. Obviously, Baozun doesn't have the crazy growth numbers like Shopify, but Shopify's market cap is around 125 billion US dollar and the price to sales ratio of around 50. But compared to Baozun with just 29% compound annual growth, Shopify has a compound annual growth of 59% in the same time. But bear in mind that Shopify achieved this growth rate by spending more and producing losses of around 125 million US dollar in 2019, while Baozun is operating profitably. Baozun's growth might have suffered over the past years because of the trade war tensions between the US and China and the tariffs on many goods. If the relationship between these two major powers eases a little bit, Baozun could profit from it dramatically. Furthermore, Baozun could turn its focus also to smaller domestic companies to drive its growth. Though we have to see if they can compete with other providers like Alibaba in that space, or if they even want to compete in that space, because Alibaba is a strategic partner in Baozun and has a 14% stake in the company. That is the reason why Baozun is Alibaba's biggest Tmall partner, also called TP. That support widens Baozun's moat against any potential competitors, integrates its platform into Alibaba's Tmall and Taobao marketplaces, and reduces the risk that Alibaba would launch its own Baozun-like platform. Furthermore, Baozun is also integrated with Tencent's WeChat and JD.com's platform. If we have a look at the management, we can see that the company is still led by its initial founders Vincent Van Bin Q and Zhuhua Wu. I like it when a company is still led by its founders, so I can have the assurance that the interests of the management is aligned with the interests of the shareholders. I have bought Baozun recently at a price of 38.76 US dollar and think it is reasonably priced in a stock market where 90% of the growth and tech stocks are insanely priced. But I will keep a close eye on the stocks since it is riskier than other Chinese tech companies. Even if Baozun would only grow by 25% year on year in the next couple of years, one would have enough upside potential in the stock in my opinion. Furthermore, they are operating in a growing market where more and more foreign companies want to sell their products, and even more after the current sickness, which accelerated everything even more. Baozun's moat compared to its competition is that it is offering the whole package for an online presence, its strategic partnership with Alibaba, and its already big portfolio of brand partners. Because of that, Baozun is the go-to place for big companies. Furthermore, Baozun is increasing its R&D expenses every year, which is really great and most likely will lead to new products and ultimately to more growth. If Baozun achieves to add value also for local Chinese companies, that would increase its future growth significantly. Despite its potential, the risk of an intensifying US-China trade war could hurt Baozun more than other Chinese companies because most of its brands are big Western companies. If China for some reason turns hostile against these companies, or the Chinese mentality turns more towards nationalism by buying more Chinese products, it would be devastating for the company. Furthermore, there's still a low risk that Alibaba will offer a similar service to Baozun at some time in the future and kicking them out of the Tmall partnership. These risks are most likely the reason why big funds are avoiding it, and therefore the stock price underperformed other tech stocks despite its consistent growth and profitability. At last, I want to show you the chart of Baozun. Baozun is currently trading in a downward trend with lower highs forming some kind of descending triangle, which is normally a bearish setup. At times, these setups can break to the upside and catapult the stock price higher. You have to be patient with undervalued stocks or stocks that are overlooked by the market. This state can continue for a very long time, but can also change very quickly. If you like this video, please hit the thumbs up button to support the channel, subscribe for more stock picks, comment and share the video. Bye guys and see you in the next one.